Hey everyone, welcome back to your weekly market outlook. This is for the 3rd of March 2025. Obviously, we're starting the final month of the first quarter. Very interesting. So last week we do have a few things we want to cover. Obviously, the PCE numbers. If we take a look at the PCE numbers, it is pretty much stable at this point in time. We do see a huge drop in spending as well. I was below the consensus, so I think the trajectory for inflation, it's likely going to be softer inflations for the coming months. That's basically what the market has been thinking. But yeah, in terms of events last week, obviously we saw what happened with Zelensky and Trump, and that's likely going to ignite a few more concerns in the market in terms of geopolitical conflicts that's ongoing there. We're probably not going to be looking at a quick peacemaking deal happening within for Ukraine and Russia at this point in time. But that's something that we need to take into account as we navigate this month as well. But let's just jump into this week. What do we have here? On Monday, we have the ISM manufacturing numbers from the US there. We're expecting a stable numbers above 50. So hopefully there's no surprises or anything like that from the US at this point in time. And then we are going to be looking at the ISM services PMI. That's going to be on Wednesday. We've got the ECB monetary policy statement. That's going to be on Thursday. And obviously, if we take a look at what's going on here, we are anticipating a little bit of a rate cut happening here. 25 basis points cut is expected by the market on Thursday from the ECB. And then on Friday, we're going to be looking at the employment numbers from the US. Unemployment rate expected to remain stable at 4%. NFP numbers, if we take a look at the NFP numbers, expecting this to kind of stabilize around the 150,000 mark level. Average hourly earnings, for this one here, we're expecting average hourly earnings to drop a little bit from 0.5% to 0.3%. But again, we had a couple of months where the employment numbers kind of overshoot or just fall short below market's expectations. So this one here, I do expect the NFP numbers to kind of change a lot before leading into the Friday employment numbers there. Okay, so let's take a look at the technicals here. We've got the Aussie USD. This one here has stabilized a little bit here. We got that floor at 62 cents holding the market for now. The RSI is starting to pick up. The stochastics has a lot more room to go to the downside. And if we take a look at it from a technical perspective, we saw a failed attempt to break above the Ichimoku cloud, from the Aussie, and we had a 6 days drop on the Aussie USD here. Now we're back below the Ichimoku cloud, so I'm not really too confident with the Aussie USD picking up pace here to kind of try to break the Ichimoku cloud one more time. So for now, the trajectory remains to the downside here. What we are concerned here is that if we take a look at the price movement here, there's a potential for this one to kind of form a flag on the weekly chart. So that's something that we need to kind of take into account for the Aussie USD, which is, in the long run, it could get a lot weaker, obviously, depending on how the situation is in terms of the economy in Australia, as well as how the tariff is actually going to impact China. Obviously, Aussie USD is going to be the proxy currency for that. And that's something that we kind of have to take note for the long-term view on the Aussie USD. But in the short-term view, this week we're anticipating a potential drop back towards 61.50. I think 61.50, or at least support one on the weekly pivot around 61.30, where the previous low was in January. That could actually potentially be a little bit of a support for the Aussie USD. But yeah, with price opening below the weekly pivot here, weekly pivot is just right around the 62.50. We do expect more pressure to the downside for the Aussie USD this week. All right, next is the Euro USD. This one here just managed to barely stay above support. We basically managed to bounce off the Kijun Sen, which is right around the 50% in terms of correction there. Price for now is attempting to break the weekly pivot level, which is going to be at 1.0420. Any break above this level today, then yeah, We might see a potential retest of 1.05 for the Euro USD. A little bit more on the hopeful note on the Euro USD. It's just that the geopolitical concern here is building up. If the conflict in Ukraine, Russia got worse, and with all the European countries standing behind Ukraine at this point in time, basically just doing press conferences and showing them support, that could put them in a non-neutral condition against the Russians at this point in time. So is that going to be a concern? It should be a concern for currency traders, because that could actually push the euro lower. And also this week we're anticipating the ECB to potentially cut interest rates. And from a technical perspective, we're kind of just barely hovering around the Ichimoku cloud then, and this week the Ichimoku cloud itself is actually going to be very thin, i.e. a break below 1.04 could actually trigger further drop to the downside on the Euro USD. So this one here, trade with a little bit more caution. I think we need further confirmation for the next move on the Euro USD. Pound USD. This one here has transitioned above the Ichimoku cloud, as we previously mentioned. This is now back at 1.2550. It's holding on steady at this point in time. But if we take a look at the positioning here, we might retrace a lot lower. We might be potentially looking at around 1.25 as our immediate support. Below that, we still have 1.2450. And this will line up with the weekly pivot levels there. We got support 1 at 1.25, support 2 basically around 1.2450. These are going to be your two key major support level for the pound USD. Any drop lower than that, that could trigger a turnaround for a downtrend on the pound USD by any bounces off the current range that we have here. That would initiate further run to the upside on the sterling here. All right, lastly we have the dollar Japanese yen. The dollar Japanese yen, this one here is bouncing off the bullish order block. Let's see, we did see a very good turnaround here. Now, what this is kind of indicating at this point in time, as we see the wick opens above the pivot level, above the 150 level, we might see the dollar yen gain a little bit. Now, this is always in a context, it's still in the context of a technical correction. We might see that correction back up to 152 and potentially 154 level, depending on how fast it gets there. But right now, we do want to note that it has bounces off the bullish order block there, and price is currently trading above the 150 level. As long as we stay above the 150 level, I think there's still going to be buyers for the dollar Japanese yen to trade a correction. Minimum move for this one here, we're looking for at least a move towards 152 at this point in time. Just waiting for the stochastics to come off the oversold condition there. I think that's basically the moment where a lot more traders are going to be looking at that and say, all right, it's an oversold condition on the dollar yen. Since we are in the range bound market condition, that 10 yen range between 150 and 160. I think this is actually very interesting to take a look at. I think a lot of traders are going to be looking at this, and this is a very attractive price to get in because we are actually very close to the support level there. So minimum risk for a lot of traders there. So we might see that push for that technical correction towards 152 and 154. All right, so with that, good luck to your trades for this week, and I will see you soon.